All right, Bob, thank you so much for putting up with the technical difficulties. I appreciate it.
Story is great to be with you, Stash.
You are a living legend in the brokerage community. I don't even know where to start. You've done a lot of press. You've been with Cushman Wakefield. You've been with JLL. You've started Massey Knakal, and now you've got the Map Room. Is it BKREA?
BKREA is the new firm, which started in April of last year. So we're about 10 months and going strong.
That's awesome. Let's start maybe from the beginning. How did you decide to start your own firm? And I want to hear a little bit of the trajectory of why you started your own firm and then why you decided to go back to having your own firm.
Okay. Going all the way back to the beginning, I started in 1984, met Paul Massey at CBRE, which was then called Coldwell Banker. And as CB at the time had about 60 brokers that were in the office leasing business, 20 brokers about that were doing store leasing, 4 people that were in building sales when I showed up, 3 of whom had about 20 years of experience. And then Paul Massey, who had just gotten out of a one-year training program. I showed up the first day on the job and the boss said, "Hey, Massey just got out of a training program. Follow him around. He'll show you where everything is around here." By day 2 on the job, it was clear that the guys with all the experience weren't going to spend a lot of time talking to us. We said, "Hey, let's just work together, split everything 50-50, see how that goes." That was a very serendipitous start of a 30-year partnership. We're very lucky. Paul and I enjoyed the time at CB. And after a couple of years, the rules were not being implemented fairly. So we said, you know what, let's go start our own place. And we went down to our banker at Chemical Bank then, predecessor bank to Chase. And we said, "Hey, we need $500,000. Where do we sign? We're going to go start a new company." And our banker laughed at us, of course, and said, "That's not the way it works, guys. Go out, get a 3-year track record, then come back and we'll talk about a revolving credit line." So for the next 2 years, we ended up saving money from each deal we did. After a couple of years, saved up about $400,000 and then started our business in November of 1988, just wanting to have a platform that would implement rules equally, fairly, and that's what we did. And we started out with just the 2 of us and a secretary, and 26 years later, sold the business to Cushman Wakefield.
That's phenomenal.
The StashCast is brought to you by Needle. What if you could use data and analytics to predict real estate transactions? With Needle, you can. Check it out at needle.us to learn more.
So building a brokerage is not an easy thing. What were some of the things that you looked for in new brokers, and how did you train them? How did you maybe weed out those that weren't up to the cut? And maybe just because I get calls all the time from young guys in college that are like, "Hey, I want to be a broker." And it's really tough. I don't think you realize how tough it is.
Stash, I always say it's a very simple business, but it's very hard. And back then, I will, at the conclusion, I'll tell you what I've found to be the traits that I see very common in top brokers in our business. But back in the old days, we looked for certain things. The business is extraordinarily competitive. So we looked for people who had a competitive spirit, demonstrated some competitiveness in their background. Team sports was always a great thing. That nothing was 100%, but usually if someone was a good team sport athlete, that was a good indicator of potential success in our business. The class or captain of the debating team or something where you showed excellence in a competitive environment was always a good thing. But most of all, what we did was we told our HR people, look, when you meet somebody, look for all these different characteristics. But at the end of the day, if you don't feel like, hey, I'd love to go out and have a beer with this person or go have lunch with this person, if you didn't feel like you would really enjoy that experience, you couldn't offer them a job. I think so many of our clients work with people who they like and trust, but it's hard to become trusted if they don't like you. Those are the things we looked at back in the day. Today, I can tell you that very consistently, I see in the top people in our business are 3 characteristics. One, they're an expert in a very narrow slice of the market. narrow enough they really can be an expert, but broad enough that they can make a good living doing it. 2, got to have passion for the business, got to love it. It's always been cyclical, always will be cyclical. If you don't love it, you're not going to have the intestinal fortitude to make it through the tough times that no matter how good you are, you're inevitably going to have. And if you have that love for it, you'll stick around and be around for when the good times return, which they inevitably will.
Right.
And then the third thing is being able to use discipline really well. A lot of what we do is not rocket science. It's very simple, mundane things, often unglamorous, but you just have to keep doing them day after day, week after week, month after month, and keep swinging away. And so those that have the discipline to do it generally will come out on top.
I'm so glad to hear you say it's the mundane things repeated over and over, that because I think from the outside it's viewed as a very kind of glamorous thing, but it's like there's a lot of no, we're not doing anything right now. I don't know about you, but I find that the most exciting times are not the closings. It's when you get the first one is when you we are interested in selling, and here, let me send you my financials. And then the second is when you get people awarded to you. Like those are the adrenaline rushes right there.
I think there are a lot of wins along the way in our business. Finding out somebody wants to sell is definitely a big win and a rush. And then pitching the business, finding out you got awarded the business, getting that first offer, reaching a meeting of the minds on the bid, and then getting the contract signed, and obviously closing the deal, which, although that's when we get paid, that's anticlimactic.
For sure.
Lots of wins along the way, no doubt about it.
You have been with large firms. You built a tremendous business for yourself. Why not hang your shingle with a large shop and decide to leverage that network to your advantage?
When we sold Massey Knakal to Cushman in 2014, I knew I was going to be on a contract with them, and that was something I did. I will tell you that because of the difficulties in running a brokerage business at the end of my Cushman days, I didn't want to go start my own firm again because all the layoffs that we had to do during the GFC were still very fresh in my mind. And we very much ran the business like a family business. And we knew everybody. We knew their spouse. We knew their kids. We knew where they went to school. We knew their pets' names. And it was really gut-wrenching to have to let people go during the GFC. And that was still very fresh. I didn't want any part of that. And I thought, hey, it's 2018. Who knows what can happen in the market? It's been okay for a while. There's little signs of cracking. If we go to a big firm, we'll be fine because we'll make it through any tough time that arises. But not realizing that at a public company, the minute something happens that might impact the stock price, there are changes made immediately. So that was an eye-opening thing. To start my firm prompted me to do it. I was forced into it. I was fired at JLL in February of last year, and thinking about what to do, I thought about what I do every day, thought about how platforms could potentially be accretive to what I do. I'm active in primarily the private capital space in investment sales. I'd say probably half my clients don't even know what firm I'm at, and I think that's the case for most brokers in our industry in New York. It's all about the individual broker. It's not about the company. Companies don't sell buildings, individuals do. And if you're not dealing in the institutional space, I don't think the company really means that much. And so in thinking about what I was going to do, I said, I've had kind of a rocky experience at Cushman, a rocky experience at JLL. I'm just going to take a deep breath, hang my own shingle, and see what happens. And so far, I've been extraordinarily happy, and things are going well, and I'm happy I made that move.
How do you handle and maybe overcome the objection of, we have to sell it out through the broker that sold it to us? Do you get that often?
Yeah, that's a very tough one. I think if you really push people on that and prod and probe, you'll see that they have sold buildings through people that did not sell them the building. So I think that's a little bit of an excuse. But that is one objection, the one objection that is a little difficult to overcome, particularly if somebody has done that consistently over the course of their career.
For me, it seems so challenging to overcome that. and I've gotten it my whole career. But yeah, we sell it out through the guy that sold it to us, but then I've not necessarily always been the beneficiary of that rule either. And so that's frustrating. Have you had that experience as well?
Yeah, look, we've seen every kind of objection that you possibly could have at this point. Last week, or actually 2 weeks ago, I sold my deal 2,347. So I've seen a lot of objections, a lot of excuses over the years, and figuring that I've only won about 26% of my pitches over the years. So that means I'm clocking in around 10,000 pitches in my career, which is remarkable to think of, but I've seen a lot of objections, and you just have to do the best you can to try to articulate your value proposition, what you can do for the client, how you've helped clients that are in similar situations to this client, constantly be proof stacking, meaning letting them know what you can do, how you can do it, who else you've helped, do your one-page case studies, and just do everything you can to try to break down the resistance and just keep at it, keep hammering away day after day.
That's good advice. Over the pandemic, you undertook an extraordinary exercise to go and map. Was it all of Manhattan or was it all of the boroughs?
No, all of Manhattan, south of 96th Street on the east side and south of 110th Street on the west side. I looked at every building that was under construction, every potential development site that had been demolished, every building that was built to less than 25% of its maximum density. The great thing about New York is it's an as-of-right zoning jurisdiction, so you know exactly what you can build and how much you can build. So I looked at the opportunities that were blatant development sites. And because we don't have rolling pastures of land in Manhattan, the way you create land on which to build is by buying a bunch of smaller buildings and knocking them down to create a piece of land on which to build a new building. So a lot of that deals with land assemblage, assembling a lot of parcels of smaller stuff. So we analyze all of those opportunities, 220 hours in the field, walking every street, and followed up by 2,000 or 3,000 hours of research that was done on each of those sites. And we created a database that now resides in what we call the Knakal map room. Clients come in there and it's very clear we know everything you possibly could want to know about the land and development business in Manhattan.
That is just incredible. It's amazing. What was your procedure like for that?
It was one day at a time, one block at a time. During the pandemic, there was a rumor going around that they were going to shut Manhattan down and quarantine it, shutting the bridges and tunnels. So as soon as I heard that, I got my wife and my daughter in the car, and we were on our way up to the country house within about an hour. When it was clear that we weren't going to be back and things wouldn't be back to normal in a couple of weeks, I had to come back in and pick up the things that we left because we left in such a hurry. I pulled off the FDR Drive and I got onto the Upper East Side, and it literally was like a science fiction movie. There was nobody. Every store was closed. There were no cars on the streets. There were no people walking around. For whatever reason, it just occurred to me, hey, this would be a perfect opportunity to go count buildings. So I called my team. I said, hey, get into the office, make copies of we have a Sanborn tax lot map that shows how buildings are situated on each parcel. Got copies of that map and took little sections of it and went out into the field and with a bunch of highlighters and marked everything up. It was a very eye-opening experience, something I truthfully wish I had done 30 years ago because it really enabled me to get real estate under my fingernails. Mm-hmm. And doing a lot of development site sales and redevelopment opportunities. It was such a great exercise. And my only regret is I wish I had done it 30 years ago.
Do you bring on new to business brokers, or are you hiring people with some skill set already?
Yeah. Interestingly, back in the Massey Knakal days, we were 250 people strong, probably hired 1,000 people over the 26 years that we were around. And I think we only hired 3 or 4 people that had been in the business previously. It was mostly new people. I've done pretty much the same thing at BKREA. I brought in some people from other markets, from DC and Florida, and brought some new folks in that are just out of school. I think there are a lot of different ways to go about doing this business. And if you have a very disciplined approach to the way you do things, it's very hard to get people who have been in the business before to adapt to that. We've always found it better to get new people who are fresh to the industry.
That's phenomenal. We're approaching our time here. I'm curious more about the training, because I've always struggled with, you bring guys in and what happens is they tend to get lost in their spreadsheets. And I had a broker very early on, didn't let me do that, for better or for worse. But how do you help new to business people avoid that?
On-the-job training is what we've done. In the old Massey Knakal days, we had a very regimented training program, initial success training, which was several months before you were allowed to get on the phone and call a potential client. And then there was continuing success training that was a weekly training session for everyone in the company. Because my new company is relatively small, I don't have anything set up quite like that yet, but I sit in the middle of the bullpen in a cube and everybody hears me all day long. I often have my phone on speaker so they can hear everything that's going on. And that's a good form of training, but I have to get to a formalized training program as we get a little bigger. Not that I want to get too big. I think 15 or 20 people is about the max I want to get to.
I'm sure you have the old training books or manuals that you could pull on to build that.
Yeah, and interestingly, although the strategies and tactics and the technology is very different today than it was, but the business is fundamentally the same exact business. So understand your market, build relationships, do the right thing, make your calls. Those fundamental things haven't changed in 40 years.
How do you feel about rent control being enacted in?
I could talk for hours and hours about it. What I will say is the price controls have proved to do nothing but create mayhem in markets. Price controls lead to a misallocation of the resource, and we've seen that in New York. We replace a very small percentage of our housing stock every year, probably the smallest percentage in the United States. And our politicians have created a disincentive to invest in the housing stock, which is terrible. That all changed in the 1970s when two programs were implemented that created a tremendous incentive for the private sector to invest in the housing stock. Bottom line is in 1978, the dilapidation rate in New York, meaning that units were in such bad shape they were considered uninhabitable, was 14%. 2019, that 14% dilapidation rate had fallen to 0.04% because of the programs that were put in place to incentivize investment of the private sector in the housing stock. And both of those programs that worked so beautifully and incentivized the private sector to put tens of billions of dollars into our housing stock were both marginalized very significantly in the 2019 rent law changes. So it's been a complete disaster. It's a way for politicians to think they're getting votes, but they're not doing what is in the best interest of their constituents. New supply is the solution to all of our housing problems, but our elected officials don't want new supply because it brings people into their districts that don't know them and might not vote for them. That's a terrible dynamic and something that needs to be addressed in a very commonsensical way.
Yeah. I would love to hear you speak more about what those programs were, but we are out of time. And my last question is, you have phenomenal hair. What have you done to keep it looking so great all the time?
Not anything intentional. I've been very blessed. God blessed me with a couple of things, and a lot of energy is one, and fortunately the hair has been hanging in there for me. So I'm very lucky about that.
All right. Bob, you're the man. I appreciate your time today, and I hope you have a great rest of your day.
Thanks, Nash. Thanks for having me on. Thanks, everybody.
All right. Bye now.
That's it for the StashCast. Subscribe, share, and stay ahead in commercial real estate and PropTech. See you next time.